Alright, today we're going to break down something that can seriously change the way you look at Forex charts. VWAP, and why so many traders use it to understand market direction more clearly. If you've ever felt like you're entering trades too late, or getting caught in fake breakouts, or just unsure whether price is actually strong or weak, you're not alone. Most traders struggle with the same thing. They're reacting to price instead of reading what the market is really doing underneath. And that's exactly where VWAP comes in. So let's keep it simple. VWAP stands for Volume Weighted Average Price. It's basically a line on your chart that shows the average price of the market, but not just based on time, based on volume activity. In other words, it tells you where most of the trading actually happened. Now here's why that matters. In trading, price alone doesn't tell the full story. A candle might look bullish, but if very little volume supports it, that move can easily fail. On the other hand, when price is supported by strong volume around a key level, that's where real decisions are being made in the market. VWAP helps you see that balance. Most traders use it as a kind of fair value line. When price is above VWAP, buyers are generally in control. When price is below VWAP, sellers are in control. It sounds simple, but this simple idea helps you quickly understand market bias without overloading your chart with indicators. Now let's talk about how traders actually use it in real trading. One common approach is trading pullbacks to VWAP. For example, in an uptrend, instead of chasing price after it has already moved, traders wait for price to pull back toward VWAP. That area often acts like a dynamic support zone where buyers step back in. The same idea works in reverse for downtrends. Price rallies back toward VWAP and gets rejected, giving traders a potential short opportunity. Another way traders use VWAP is for confirmation. If price breaks above a resistance level but stays above VWAP, that breakout is considered stronger. But if price breaks out and quickly falls back below VWAP, that's often a sign of weakness or a fake move. Now let's be real for a second. VWAP is powerful, but it's not magic. Especially in Forex, where there's no centralized exchange, VWAP is based on tick volume rather than true traded volume. That means it's still extremely useful, but it should be treated as a guideline, not a perfect prediction tool. The best traders don't rely on one indicator. They use VWAP as part of a bigger picture that includes structure, trend, and price action. Think of VWAP like a market compass. It doesn't tell you exactly where to enter, but it helps you understand the direction of pressure in the market. And once you start seeing that, your trading decisions become a lot more confident and a lot less emotional. You stop guessing. You stop chasing random candles. And instead, you start aligning yourself with the flow of the market. So here's a simple takeaway for you. If you're struggling with timing entries or you feel like you're always a step behind the market, start paying attention to VWAP. Watch how price reacts around it. Notice when it holds and when it breaks. That alone can completely change how you read charts. Alright, that's it for today's video. If you found this helpful, make sure to like the video, subscribe to the channel, and drop a comment letting me know what you want to learn next. Thanks for watching, and I'll see you in the next one.